Federal regulators are expected to make the most sweeping changes to the credit card industry in decades. They're getting very tough on banks and lenders over fees and interest rate changes. So what will it mean for you and your wallet? Jordan Goodman is an author and personal finance expert, and he joins us this morning. Good to see you again.
Good morning, Maggie. Nice to be with you again.
So they're going to talk about changing these controversial practices. I'm going to go over my personal favorites.
Okay, sure.
And you tell me if they're changing.
Absolutely.
Number one, when they raise your interest rates, even when you're like a day late with your payment.
That's not going to happen anymore. These are really good things that have been a long time coming. So the first thing is they're not going to raise the interest rate if you've been, less than 30 days late. So in the past, if you're 3 days late, they'll hit you. That's not going to happen anymore. So that's a really, really good thing.
So it won't show up on your credit report unless it's more than 30 days late
Correct.
either?
That's correct.
Okay.
That's a good thing because a lot of people have been hurt by that one. The second one is no retroactive interest.
Yeah, because sometimes even when you pay in full, you get that late fee.
Well, this is what's called double cycle billing. Is you've paid your bill for last month, but you're still paying interest even though you've paid it off in the past.
Right.
It's outrageous. So they're going to stop double cycle billing. So that's really a very, very good thing.
Okay.
The next thing is they're not going to increase interest rates if your payment is missed on another card. Now,
What do
this
you
is
mean
what
by
they
that?
call the universal default clause. If you miss on your phone bill or something like that, the credit card companies see it and they raise all your interest rates to 29%
across the board.
That's what's called the universal default clause. That one's going to be gone too when the Fed votes today.
And
the fourth one is they're going to improve the readability of monthly statements. These things have got all kinds of legalese and very difficult. That's supposedly going to make it much easier to read. So you understand the interest rates, you understand the late fees and all that. So that hopefully should make things a little bit better.
These all sound great, but I can't imagine that the banks and the credit card companies will go quietly, will accept this blindly.
Well, that's right. The banks are going to really battle on this one. They're going to lose about $12 billion in income from these kind of things. And they're going to try to make it up in other ways.
How?
Well, they probably will, the 0% offers you see these days or the bounce transfers, those might be much more limited or not available at all. They'll raise annual fees. They'll do all kinds of other things to squeeze money out of us one way or the other.
Well, that's fair because right now it was almost too good to be true. The
well,
offers
it was.
that they
Credit
were
has
giving.
been flowing very, very well. But for a lot of people, with these things, they were getting caught and really, really getting hurt. There are some things people can do today, though, without having these rules are going to go into effect probably 2010, something like that.
So what we'll do is we'll put those up on our website, earlyshow.cbsnews.com. These are things you can do right now.
Right.
Because this probably we won't see till you said 2010.
That's right. That's when they're going to go into effect. They're getting voted on today, but effect 2010.
Jordan Goodman, thank you.
All right. Thank you, Maggie.
Happy holidays.